Ludwig, you made it. Good. Good to see you. Look, we're excited. I think this next one, I hope it's going to be quite an opinionated discussion around taking European companies to the US and whether it's a nice to have or a necessity when it comes to scaling and potential exit avenues. We've got a great panel, operators, investors from different stages. On the operator side, we got two different stories, one where the founders moved to the US, the other company managing this more from a M&A strategy. So excited to hear all of the different angles, and maybe I'll let every of the panelists kind of introduce themselves because it'll be much more exciting than me making those intro on their behalf. So please go ahead.
Sure, thank you. I'm Christian, and my company is Leapwork. We're in the software automation space, test automation space, and DN invested in us back in 2019. And I'm going to introduce the company in a few minutes, so we'll skip to the next.
Hi, I'm Felipe Navío. I'm the co-founder of Job&Talent. We are a job marketplace for essential workers. We are doing 1.8 billion euros in gross revenue, and the US is actually our biggest market, and working with DN Capital for a very long time.
Ludwig Ensthaler. I'm a GP and founder with 468 Capital. We sit here in Berlin and in San Francisco, so we know what it's like to try to take a business from here to the US. Happy to talk about it. Thanks for having me.
And I'm Henrik, the missing piece. I'm a partner of a growth equity firm based out of London called Sprint Capital, mainly focused on Europe. We have a couple of investments in the US, and just like everyone else, tries to push as many of them as possible across the ocean. Thanks for having me.
Great. So maybe let's start from the entrepreneurial journey. So Christian, your company started in Denmark, but then quite quickly found a go-to-market motion in the US, starting in Denmark. But you still decided to make the move yourself and your co-founder to move to the US. Why did you feel that was a necessity? And kind of looking back, what are the things that this has unlocked that you think you would not have been able to unlock had you not been there physically?
Yeah. So first of all, when we started in 2017 going into the market, we quickly found that US was a big market. And it got increasingly more difficult to sit up until 4 a.m. in the morning doing business on the West Coast, which is needed. But we pretty much from the get-go had more than 50% of our business in the U.S. At some point, still self-funded. I went to the U.S. to meet a Danish guy who was CEO of a company around $500 million ARR. And he told me that if you are a global business, and then you're competing in a global market, and in the US you have the talent, the market, and the money, and so he said you better get your ass over here as soon as possible. But when you have family and stuff like that, it took a bit longer. But finally, 2 years ago, I moved with the family to the US. He said, by the way, don't move to Boston. You have to move to San Francisco. And I still moved to Boston because at that point in time, we had, in order to be in close proximity to the teams in Europe, because we have most of our people still in Europe and India.
And just now kind of looking back, was that the right move? Did it really provide you with opportunities that would not have been possible had you not been there physically?
Yeah, so I think what I've talked to other founders, what they've experienced is that when you're based out of Europe, you try to hire someone to take care of sales in the US. I haven't heard about somebody who got a player to do that. So you get C players. You can't control what's going on over there. You have to be there. So it was definitely the right move, and probably something I should have done before. When you talk to customers and partners, like we have a partnership with Microsoft, everything that's even from Seattle to Boston is far away. Everything outside is foreign or international, and so if you want to build trust, you have to be there. If you want to hire the right people, you have to be there.
Felipe, you guys took a different approach. You had a dominant position in Europe. What made you decide to expand into the US, and why that strategy?
So look, for us, like looking at the global market, like we had the ambition as well to be a global company, and the US obviously is the biggest market, even bigger than the rest of the international altogether. It took us 13 years to get to the US. Like one advice will be probably looking backwards to go much faster. Like because for us this has completely changed the company. The only good thing of getting there when we got it is that we make all the mistakes in Europe. That is much cheaper to make them. And then we managed to get into the US with the playbook, like well written and well done, and we have been able to successfully execute them. But I would have gone earlier if I will come back, definitely.
So now moving more onto the investor side, there is a heated debate, and there was a lot of recent articles on the FT around the exit potential in Europe versus the US for technology investments. Ludwig, you guys had one of the more successful SPACs in Tony's, which is quite a remarkable story because they're growing extremely fast in Europe, but they've also expanded into the US, were very successful with their expansion into the US. The company is listed in Frankfurt, if I'm not mistaken. I think I saw a couple of LinkedIn posts from you about some level of frustration around liquidity in the European market versus the US market. Just love to hear your story, and do you think Tony should have listed in Europe? Should they have decided to list in the US? Take us through a bit of your learnings on that front.
So I think in terms of listing, that's an interesting question. We took 2 businesses public. Tony's was one of them in Frankfurt. And I'm not sure if I would take a third one public here, and probably would rather list in New York. I think you're fine here to list if you're a big brand name. You can list Porsche here. I think that's fine. The markets are here. They're liquid enough. But with some of these growth stocks, what's even more lacking than liquidity is kind of the flexibility in capital markets, right? So in the US, some of these growth stocks take the capital markets as another opportunity to raise capital, to raise multiple rounds, equity, debt, and so on, much more flexible. That's not easily possible in Europe. So I think that's one of the main reasons where I'm not really sure anymore, unless they change the structure here. I would still advise to list here, but it's always a case-by-case thing. I think in case of Tony's actually worked quite well. I mean, it was a 21 listing where valuations were obviously, multiples were different to what they are today. So I think relative to the market, they held up very well in Europe, and I think they now have enough liquidity to, they've arrived here, but I would say for a lot of smaller stocks in particular, maybe consider a New York listing.
Just to extend on that point around structurally, what should be different in Europe in order to support the, it's not a question of supporting companies that are not deserving, but like Tony's, you're looking at the growth rate, you're looking at the profitability, clearly is a great business, and there's many more like this in Europe. There was Darktrace, which ultimately was taken private by Thoma Bravo because it couldn't really get the support in the European equities. What is structurally missing in Europe, and what could unlock this?
Yeah, so
and maybe that's an open question to anyone who wants to answer.
I mean, again, if you have a traditional business here, I think that's fine. For sort of younger, growing, risk-seeking businesses, there's just not a market here. Like, I don't think if you have analyst roadshows in Frankfurt and Amsterdam and so on, and we send our companies there, they're done by 11, because there's just not more people showing up. So I think we don't have the depth, we don't have the liquidity. We have a lot of red tape and regulation about doing capital increases as a public business, right? I mean, look at Amazon, for example. They went public, I think, with a market cap of 150 million. Yeah, and look at what happened to them since they're public, right? So I think in the US, this segment is basically publicly listed venture capital, right? That more people have access to. That's a different mentality than you have in the capital markets over here. And I think the buyers aren't here, nor is the structure to really raise huge sums of capital here in a very dynamic fashion. So we need to change both of that. The structure we can change easily, and maybe, I mean, obviously that's the dream, and no one quite knows why it's not happening. We need a unified public capital market here in Europe, quite frankly, right? That I think would be great.
That would be great. And I mean, Henrik, Sweden has kind of figured out this mini stock market that seems to be highly liquid. Like, what has happened there? And any learnings for any other European countries?
I mean, it's true, and it's kind of fascinating. It looks like a country that's founded by Robin Hood. It's, I think the penetration of digital trading is almost, I don't know, I was about to say 100%. Obviously, it's not 100%, but it's incredibly high. You have two of Europe's best online trading firms in Avanza and Nordnet, and all the banks are very well equipped to provide it as well. And there is a proper equity culture that I think is missing in quite a few markets in Europe. I think you may have it in the UK, Holland, maybe Sweden for sure. A little less in Denmark. I think Denmark, Germany, more of a credit kind of safe culture. So definitely, it's actually when I look at, and I can't really say that openly in the board because everyone would just laugh at me, but if I look at a business like Vinted, which is one of our investments, which France is the biggest market, UK second biggest, CEO from Holland, based out of Lithuania. Where do you list that? No business in the US, otherwise the US size-wise could be. I think it would be amazing in Sweden, actually. Stockholm Stock Exchange would be great. But if I say that, I'm going to be laughed out of the room. So, no, I don't know why that is, but I can, but then again, I think who did, there was a German fashion company listing in Sweden. I forget the name, but anyway, that didn't work so well. So I think scale is a problem generally in listing, and listening to Nenad, where did he go at the beginning of the day? No one should list anywhere, which is the sad truth probably. But listing companies today is really hard, and as I think the theme for this panel, the US provides a really strong option given it's a consolidated market for the largest economy in the world, and we don't have that in Europe, where Europe has lack of depth and liquidity in almost all markets, even actually included Stockholm, even if that's reasonably good.
Actually, so you mentioned Vinted, one of the most remarkable consumer stories in Europe. Clearly has now the scale that it could list. What does that mean in terms of the management team at Vinted? How are they thinking about exit, listing? Does that mean they need to stay private longer? Has that impacted at all their kind of growth strategy, being in Europe rather than having kind of access to the US?
So I think one, you have a cycle problem where people don't go IPO because the markets are generally weak. And that typically changes with the cycles as we've seen. But I think you may have a bit of a structural problem that the being listed doesn't really serve the customers if you think of the customers as the companies. So is life for you as a founder or CEO better after listing or worse? And I think if you did a survey, many people will say this is awful. Like, I spent so much time managing a lot of noise and a lot of volatility and a lot of time sinks that I didn't have in my life before, but I don't get cheaper capital. It's almost more expensive because volatility, you can debate whether volatility is higher or lower in the private markets, but at least the way volatility is measured financially, it's higher in the public markets. So I think the problem with the public markets is that they have stopped serving the customers, if you think of the customers as the companies and the management teams, which is why you see, if you take Stripe on that side of the ocean or Revolut on our side of the ocean, I think they're always 2 years away from an IPO, and they have been for the last 8 years. Like, oh, we're going to IPO in 2 years' time. And then I think when it comes to the decision, I think everyone just looks around, what is this actually going to make us better? But at some point, obviously, there are so many stakeholders around the table, a listing is maybe the best way, but I don't know.
But does that mean, and you give so many examples of companies, right? So Vinted, pan-European, Revolut, global player. You also have back market in the circular economy that they've made the step to the US, if I'm not mistaken, and doing so quite successfully. How does that impact your underwriting in terms of investments? How important is a potential US entry in the way you assess your investments?
Good question. I think The underwriting, no, look, if you're not in the US, it's such a hard thing. It's difficult to invest and underwrite a successful US launch if you're not already in the US. So I feel like from an underwriting perspective, that's difficult, of course. But I think every startup is so, on paper at the get-go, is impossible. And launching it successfully in the US is impossible. It's a little bit what Christian said. If you're going to do this impossible thing anyways, why not try it in the US? Because that's actually going to get most bang for the buck for the impossible journey you're setting out either way. So I think for an earlier stage company, I definitely would swing for it. And as you mature as a company, you probably have figured out where you can dominate and win. And if that happens to be the US, as for back market or Tony's we mentioned before, Leap, then amazing. Like then the world is yours. That's obviously the big prize.
It's a plus. You're kind of looking at the core, and then if there's this potential for the US, great, but I'm not going to bank on it necessarily, or I'm not going to. There's not a big multiple arbitrage between how you would value, for instance, a Vinted that is pan-European or a back market that operates in a similar business model, but that's already opened up the US market. There wouldn't be necessarily an exit kind of.
But without giving too much away, back market I think is the higher multiple business, and they're in the US. So in those two cases it would be. But I think that's anecdotal, to be honest. So yeah, but of course, I mean, I think it's. I think Europe should definitely feel a little more of that all the time. The US is performing so incredibly well. The companies are so incredibly well managed. The funding is so incredibly competitive. We need to benchmark ourselves with that all the time. And if you can crack the code, I think you deserve a high valuation, I think.
Moving back more on the operational side of things, the US is very expensive to scale, right? I mean, the salaries are much higher, the competition for talent is much higher. How did that impact your organizational structure, right? From like having a team that was mainly located in Europe, how do you benchmark salaries? How do you align salaries? How do you align expectations? Like, can you take us a bit of the journey of creating that one organization across two continents with quite different fundamentals?
Sure. So I didn't know how expensive it was when I moved here. To be honest, cost of living is crazy. So we have differentiated. Salaries in the US and in Europe, and you have to. And I know people talk on various websites and stuff about their salaries, but we don't have any problems with that. If that was what you were thinking about. But yeah, so cost of living, salaries are definitely a lot higher, but also we seem to be able to get higher ACVs in the US. Faster sales cycles, so it actually makes sense.
You're looking at the ROI, which makes sense. Yeah. Got it. And Felipe, have you ever thought of going yourself to the US? Like, who did you hire to kind of manage the operations in the US? How did you build that trust? How did you integrate that organization? Do you need to integrate culturally the organizations, or you shouldn't do that? Help us understand how you made that M&A strategy successful in the US?
Yeah, sure. Because actually for us, that was a big thing, because for family reasons, we couldn't, neither Juan and myself, to go there to the US. So when talking with other companies like Klarna, HelloFresh, it was a bit of the same advice of don't try to hire somebody there that, they're going to sell very well, but it's not going to work. So you need to bring somebody that has the culture of the company, because if not, you're going to try to hire an American there, and then probably that's not going to work. So what we did actually is we took some of the people that have been with us for 6-7 years, and we sent them kind of a bit of a launch team there. Then we brought Diego, that is our CEO of the US, that I knew him from many years ago. So as well, we tried to bring somebody with the same culture and the same mindset. And even if we did M&A, because we need always, when we launch a country, to do M&A to get credibility, and have an initial set of clients. We did M&A, and then we integrated that M&A into the launch team that we sent it there. So from day one, it was a story of going there, integrating that into the launch team, making sure that the launch team was actually somebody that represented the culture of the company. And then it has, I would say, changed a bit of the culture of the company overall. Now we look at the business not anymore in countries, it's the US and international. And the US, because of the talent, because of the competition, because of the quality bar, has helped the rest of the business, to bring up the standards. So at the beginning it was a bit of tougher. Now as well, the US as well has realized that there is a lot of talent in Europe, and 2.5 cheaper than in the US, more or less. So our tech team, our engineers, are based here, and has been working well. But I think it's because we choose the right people on the launch team.
Awesome. Ludwig, so you were also, back at 468 in Europe, but you were at GFC in the US doing a lot of the investments there at the time. So you've got a very strong understanding of both markets. When you look at kind of your European companies and founders coming to you and say, when should we expand to the US? Is there any lessons, kind of advice that you can provide, or do you just need to go out there and test it and come back? Or there's signals whether or not sometimes, this is for you or this is not for you that you try to advise your companies on?
I think it's case by case. I think we have many examples, both in the 468 portfolio, which is obviously younger, also back at GFC, of US companies being extremely successful in the US and actually beating out all the local competition there. Yeah, I mean, look at what HelloFresh have done in meal kits, or your portfolio company, Home2Go. When they came to market, there was an incumbent there, and I think they beat that. Many other examples. So I think there can be, and also that's just two consumer examples. You have many SaaS examples as well. So I think that can really work. But I think it almost only works if at least one founder actually moves there, at least for a while. That's something we've observed. So you've got to give it a full swing. Or it's not happening, when the business is ready for that is I think case by case. Yeah. So with Tony's, I think it was in year 6 or 7 that they decided to launch there.
Had there been any local competition that had emerged, kind of trying to copy their model at the time, or were they still quite novel when they?
So there had been, but it's disappeared. At least, I mean, there's I think a UK-based competitor. But there were 2 or 3 in the US, but they've disappeared, to the best of my knowledge. So in Tony's case, they don't have local competition. But nevertheless, it was still tough to roll it out. Yeah.
Right, and then Christian, kind of coming back when you're seeing there's so much macro and political turbulence in different regions. Does that, do you see an impact on your business? Like sometimes the US is going faster than the European markets in terms of sales and attractiveness, or the macro considerations don't have much of an impact on the business. And it's more the operational execution that matters.
I believe that we work in both economies. So when market is going up, then everybody needs to automate to free up time. When the market is going down, everybody needs to automate in order to save cost. And so what we've seen basically also over the past year in the US is still that the economy that we at least see is still good. So we're doing a lot of business there, but also here in the DACH region that has been a bit more under pressure the past couple of years. We're actually doing quite well.
Felipe, you're closer to the employment, so maybe more impacted with the macro considerations. Do you see those shifts in sentiment impacting the business, and what does that mean in terms of operating in with that volatility?
Yeah, I think actually we live in a bit of strange times, no? Because although the economy is doing good as well, during COVID, a lot of people spend money on goods. Now after that, are spending in services. So goods, actually are living a recession while the economy is not really living a recession. So for example, in our case, the US is in a recession in our market. They are 15% year on year down, while some countries in Europe, they're up. No, like where typically in the past, they used to be always the US first, kind of either up and down, and then the others following. No, so I think still there is a bit of a change because of what COVID changed, a bit of on the economy, that that right now is a bit of difficult to read, no? Still, we believe that the US will keep on leading, and more we're going to be, in terms of capital allocation, for example, more investment, and more, bet on that, no? So that's why we're mostly looking at the evolution there on the economy.
Sense. And so Jean earlier was talking about how important it is for European investors not to become complacent about US players coming into the European market, or else you may end up like the investment banks 25 years ago. How is that challenging your model to see more and more US firms coming in the growth stages, probably applying a different valuation, more US type of valuations into the European market? How are you adapting to those situations?
No, that was actually a very good description. You could add law firms to that as well, and management consultants, and it's kind of a trend. So I think it's you're fooling yourself if you think you're going to have a quiet life in the holiday home of Europe. So I think but the good thing now is that it's easy to travel both ways, and it's easy to learn, and information flows extremely fast in both directions. So I think we can definitely be competitive in Europe, but I think we actually just need to realize that that's what it is. You need to be competitive against the best in the world rather than the best in Sweden or the best in Frankfurt or whatever it may be. So I 100% agree with that, and I think it's that's the challenge. But I mean, business is a game, and this is the sport. So I think it's actually quite fun. I think it's much more fun. It's incredibly difficult, but it's the thing that gets you out of bed in the morning and keeps you up at night. So I think it's great, but it's not easy, but I didn't expect that. So
awesome. Thank you so much, everyone. I appreciate the time.